Good morning and welcome to Trading with Larry. I'm Larry Benedict. Welcome to the show. I'm usually joined by Eric Shamilov, but he is traveling. He's my partner in crime. He's been working with me for about 5 years, and he handles pretty much all the trading setup and analysis that I need to put on the trades to make all of us subscribers and myself successful. And usually behind me is Thomas Maples, and he should be in a little bit. He had to deal with something with trading, so he'll be hopefully here later, but right now it's me, and it's the beginning of a new month, the month of June, and I welcome everyone, and I welcome new subscribers and new people that are coming on to watch my podcast. I can give you just a brief background on myself, and a lot of people obviously know me, so they know my story, but I started in the business about 40 years ago, and I started in options and I learned options from the ground up, and I have 40 years of experience in that. And then I transferred that knowledge from only equity options to really taking advantage of the global macro landscape out there. And that that basically encompasses the 40 years. I trade S&P futures. I trade I trade bonds. I trade currencies. I trade a lot of equities, and I cover the global landscape across the board. And it's been an unbelievable ride. I've been on the floor from the crash in 1987 all the way through today. Dealt with the dot-com bubble. I dealt with the '08 financial crisis, COVID, the 2022 very slight bear market. But we've been able to navigate all of those landscapes and been profitable in every down move. So you have the ability to learn from us here, get market knowledge for the day. We kind of break things down here day in and day out. We have an opinion. I have an opinion on the market that lasts obviously more than a day. But what we like to do is try to get people profitable day in and day out. And, that's the goal of the opportunistic trader. And I hope I have the ability to give that to everybody watching today. So the first thing we do on the show is we talk about the week that was. Last week, market was up again about 1% and change across the board on equities. Again, faced a little bit of dollar weakness, which usually leads the market to be weaker. That's appearing today as the market is down a little bit, but dollar is sort of broken out here. It's 114.20 against the euro, 135.44 against the British pound, and 142.80 against the yen. So that's a clue that we look at. We try to put together all the puzzle pieces, and that is one of them. And that is leading us to still remain a little bit bearish. It's been a difficult market for sure. The month of May was a very strong month for the market. And we're coming into June in an uptrend, but we think that should go away. And again, bond market is back to 443, got up to 460. Market traded down off that to 5,800, and then came back and ended the month at 59.30. So we're back below 5,900 to start the month. And that, believe it or not, if you close your eyes, and I said this the other day, and you look at the tape right now, you could see the market is basically unchanged across the board. S&Ps are up very slightly. Nasdaq and Dow are down. So, there hasn't, there's been an unbelievable amount of movement in the first half of this year, but we're right back to where we were. And it's a little bit difficult to manage for us because, we got, I wouldn't say lucky because trading isn't luck, but obviously, it's like playing a game of skill, but you need roles. Like if people out there play backgammon, right? You could be the best backgammon player in the world and you can get beat because the roles don't come up for you the way they should. Now over time, obviously the better player is going to win, but we need roles and we need market cooperation, etc. And we had that at the beginning of the year, and this year is very different than any year I've seen in my 40. And the reason why is because the market has come back from a down plus 30 down in Nasdaq, and it came back within under a month. So that's something that I have not seen. I've seen a lot of stuff. I've seen the crash of 87. I saw that come back and, almost end the year positive in 1987. But this move, I believe, kind of dwarfs it. And a lot of the reason why that is you have computer algorithmic trading, and that exacerbates the move. And it gives the move a little bit more force because computers and speed now in the market have changed the complexion of the game. The game is now a speed game. How fast you can route to the exchange, how quick your direct line is, and all of that. I know a lot of people that are watching don't really have that, and they're either trading off their phone or they're trading off their computer. And that's really, it's high latency, meaning it's very quick, but it's not when we're talking milliseconds. I remember when I was running my hedge fund and we were checking like speed and whatever, and they're like, you're, you know 1/10 of 1 millisecond, slower than whatever. And I was like, that doesn't sound like a lot, but for some reason in trading, it is a lot. So, remember that you're operating a little bit from behind. That's a little bit of what we call the edge that we give up to the professional algorithmic firm. That's why, we don't trade in seconds. We'll trade in at the fastest inside of a day to weeks. But there are firms out there, tons of them, that are trading in milliseconds. They're, buying at 8 cents, selling at 10 cents. And this is going on back and forth and back and forth. And it really adds a difference to what I've seen growing up in the market through my career, both on the floor and then running a hedge fund. So the landscape has changed a little bit. It's, obviously made it a little tougher to compete with the high speed, but we're not as concerned with that as I once was a long time ago when we were, trading. I don't know. I would say I traded 500 trades a day manually, minimally. And so, we were clicking computer, we were clicking the buttons and we were, day trading and maneuvering stock. But, that's really no longer what I'm doing. It's much more thematic, it's much more option skill. And, we've been doing well. Recap of the month of May. I have a show that we run every Friday called Ask Me Anything. So we go over our trading for the week there. So if you were able to watch that, you kind of know. But the trading was slow in general for the month, and it was not a great month for us. But overall our year is intact and we're doing well. We think that will continue. We're not doing a ton of trading right now. It's coming into the summer months and volatility has slowed down, and we're waiting for a catalyst to really give us an opportunity to jump on either side of the market. Looking at a currency trade now as well as a bond trade, that probably will happen today or Tuesday. And on the equity front, we're still sitting in our short Nasdaq and short S&P position. It keeps looking like it's going to work, and then it just doesn't work. So, we're going to give it a little bit more time, but again, we're running out of time on that. And as well in crypto land, we have a put on Bitcoin, and that is sort of winding down as a losing trade, but we are short MSTR through MSTU, and that's kind of unchanged. We think there is a good opportunity there. And that's what I'm seeing as far as stuff for us. But just looking at the markets, I think it's important. I told everyone last month to put the bond and the 10-year up next to their S&P futures or next to their equities, because I believe that may be the catalyst that we're looking for this down move to occur. And again, we have to have yields now above 460 to have anybody really looking at that. But I do think that's going to happen. And the trade may be a little bit crowded. I know Warren Buffett, I was reading this weekend that, he's short bonds and 10 years. The trade may happen, but it's going to take a little bit of time, and volatility is down. An interesting one that we watch every day is the two markets in commodities that we watch is gold and oil. And those markets, crude oil is at the top of the range at 63.50. I'm looking at that as a potential long here. I want to see if it pulls back a little, but I think the trend is showing itself here. So I think we're going to look to buy a USO or maybe an integrated oil to take advantage of the move that we're seeing in crude oil here. It's back to 63.70. The highs have been in the 64s. I think a lot of this has to do with the the global geopolitical risk that we're seeing. There's been unbelievable stuff going on between Russia and Ukraine, who are supposed to have peace talks, but Russia's hitting them very, very hard. And then Ukraine, had drone attacks deep, deep inside of Russia, taking out a percentage of their air force, which is pretty unbelievable that could even happen in that manner with a country like Russia that you're thinking is this, power, and they got really hit hard. So I think a lot of that oil move might be coming from that, as well as there was some talk out of the the United States to China, talking about there's an imminent attack or an imminent move that's going to be made on Taiwan, and really pushing the buttons of China. And there was a lot of back and forth, and it's pretty amazing to me that the equity markets are only down 15 today, because if we were in that downtrend, and we talked about it Friday when we were down, we're like, the news looked really, really bad for us on Friday, and the market any other time would be down 1%. It was down like nothing. So I know they had there was a big MSCI reweighting, for the month end, so they had stock to buy. So maybe that's it, and maybe there's a little bit of residual stock to buy today. So keep an eye on that. But really, the geopolitical stuff that's going on is a little bit concerning. So we're going to keep a good eye on that. we're gonna see how that affects the market. And again, once we get through the opening today, we'll get to see what what looks interesting. And one that's been interesting, and we probably should have been on, but we're really trying to stay tight because our trading hasn't been the greatest. But this Nvidia trade off of earnings traded up into the mid 140s, and now it's 135. I don't know if that means it's on the way back down to 110, or this is a head fake, but it's interesting levels to look at. We don't have a position there, as well as Apple around the 200 level. It just seems like a short, so we may look to put a short on there. But overall, we're going to try to stay focused on the indexes for now. We will be doing some equities. Again, we're looking at oil right here for a trade. We're also looking at gold for a trade. We're back on the higher end of the range. Still mid range. We traded 3,500 on the high, a little higher, got down into the 3,100s, and now in the mid 33s. So we're 3,380, 70. So it looks interesting, and I feel bad that Eric's not with us today because that's his baby. So hopefully he's got a chunk of gold and he's making a lot of money today. But I'm not for sure on that. We'll get a read on that potentially tomorrow if he joins us. I know he's traveling, and he may or may not be here tomorrow, but definitely by Wednesday he will resurface, and it'll be good to have him back. But really, what's important, I want to tell people out there what's really important is when you're not doing well in the market to sit back and really do a lot more watching and a lot less trading. And I know it's hard for people, but it's the right thing to do. And then, you know, when things are amazing, we're we're trading, or you should be trading 5 times a day potentially. And people that have been with me for years and years and years know that's sort of how we do it. If you just joined, I know people are looking for trades all over the place, but right now it's just not setting up. So we want to sit tight, and we want to let the market come to us. I think it's important. It's called risk discipline, and we try to keep that in place. We don't want anyone to blow up their account or get really hurt. That's why we always suggest you trade very small. Start out trading one contract. Should cost you a few $100s at the most. Usually we do options that are anywhere from $2 to $3.50 for our long option product, the Opportunistic Trader LOT. So you know what your risk is, and it's important to know that. And I know I get written in all the time, should I average down? And you know what? Averaging down sometimes works, but when it does not work, it creates a massive problem because you are now long double at a much worse price, and you need the market to go your way, to get back the money. Now, obviously, it only has to come pretty much half the way back because you've averaged in, depending on where. Um, but we don't suggest that as a good strategy. Long term investing, it's not a bad idea if you're trying to get a portfolio that will last you years and years and years. Then averaging in is not really a big deal because it's sort of your plan. You'll buy 100 shares every 6 months or whatever it is. We're a trading strategy here, so we're looking to get in, get out, get paid, and make money. And why I love a trading strategy is because with an investing strategy, you got to live through all of these down moves. And so far, over the last bunch of years, it's been rewarding because the market has always come back. But there have been times where the market has had years of not coming back. It's been a while, and people are trained like a Pavlov's dog to always buy because the market always comes back. And I always laugh to myself because when the market's on the low and everybody's long, I get like 500 calls. It's not as frequent as what it used to be, but it used to be, am I okay? What do I do? And, I'm like, listen, if you can hang in, I would hang in. But now when those calls come in, it's like they barely come in, and the people are like, oh, when is the market going to be back? And, it's funny on this technology down, people were really hurt in April. They were really hurt. And then by May, they were back and making even more money. Some of the stocks aren't back. And if you look at the breadth of the market, it's horrendous. But really, the investing public is in 10 names at the most. They buy indexes, obviously, so they're diversified, but their trading or their stock holdings are in the same 7 or 10 names, which we all know what they are. So those were getting really hit and people were hurting. But now that the market's back, they're feeling powerful and they're not going to sell. They didn't sell down there. They're not going to sell again. So what I always say, and you hear it on this show all the time, is sellers live lower and buyers live higher. And right now we're in a buyer lives higher market. No one's going to sell, and the sellers have been washed out, and the buyers can continue to buy. So until we go down a couple of percent from here, the first couple are going to be hard, unless there's a news related story. So right now we're sticking to our knitting. We're not adding to those positions. We're staying light. There is stuff that I'm seeing today. Again, we talked a little bit about it, like crude oil looks interesting for a breakout here. So we're going to keep our eye around 64 to see if that holds. Gold again, mid range. I think you can buy dips in that market. We're not looking to sell it. We've had some really good gold trades this year, both sides, both long and short. But right now, we're going to stay away from that market and just watch from the sidelines. But it looks interesting for sure. And, markets are quiet coming into the summer, beginning of June. Generally, from my recollection, and when Thomas is back, we'll get some fact on this, but I think June is kind of a choppy month. Starts out okay and then gets choppy into the summer. Um, the sell in May and go away. Everyone's chirping on TV that it didn't work. It didn't work, and it didn't work, but the market's only up a few percent. So if the market comes in, does that mean sell in May did work or didn't work? So it's always Monday morning quarterback market. A lot of these innuendo sayings don't come to be, but when they do, people really, harp on it and they get focused. I remember something called the January effect, where what would happen at the end of December, everyone would sell the stocks that were losing on for tax purposes to harvest tax losses against the gains. And they had this thing called the January effect. So you would buy those stocks at the end of the year or into the beginning of January, and those stocks would rise, and it would always happen. And it's funny, when I was trading year after year, especially when I was at Spear Leads, which was a large specialist firm that was bought by Goldman. I worked there from 1989 until 2000. I was the lead specialist in the XMI, which was the first product they did program trading on. And then I ran their index hedge book for the whole company. But we started looking at this effect, and it was working, working, working. And then one of the guys in the group was like, I'm going to do this. And the funniest thing was, it wasn't that funny because we lost money. We did the January effect, I think it was 97. I can't remember exactly. And we lost money. So something that worked. We finally did it, and we probably jinxed it, and it didn't work. So a lot of this stuff is, fable. It does work, and it does become a bit of a trend, but you got to be right on the timing. So the sell in May and go away is yet to be determined, even though May was a good month. So you probably shouldn't have sold. You could have held on to the beginning of June. But we'll see how June goes. And right now, the market's starting out soft. S&P down about 21 points for the day. And the Nasdaq's down about 100. So pretty much 0.5% and 1/3%. So not really that big of a down move. Europe down slightly. Again, bond yields ticking up a little bit. And currencies are the place where things look, you know, they look weak. The dollar looks like it's vulnerable, which is a shocking trade because the beginning of the year, people got spun around. When Trump won the election, the dollar screamed and the euro almost got down to parity, which is 100 against the dollar, par. And it is now 114, which for the currency is a humongous move. Over a 10-15% move is huge. So these are huge moves, a big dollar fall here. And I think it's the policies that we're seeing, these trade policies, which are facing hiccups all over the place. The hiccup of the court holding them back. Obviously, they appealed that, but this is going to go on and on and on. And I heard over the weekend all of these guys scrambling to to basically say, hey, if we get stopped on tariffs, we have other ways. And the thing is, I don't know what the other ways are, but it doesn't seem like the other ways are that easy. And the tariffs are not being taken well by our country, our business owners, and especially across the world. And now, a little bit of probably why we're down this morning is China hit back and was like saying all these things about unfair trade and the Taiwan thing that I mentioned. So it's giving us a little bit of a down move. But what's interesting is if this happened when we were in a down phase of the market, we'd probably be down 100 S&P points. So there's an inherent bid in the market. We got to respect that. We got to be careful. So we're trading nimbly. We're not adding to our short yet. We may if the market breaks a couple of percent, but right now we're sitting in our short positions on the index. There's only two, so it's not a lot of positions. And we want to be very, very nimble here today, and keep an eye on the currency, keep an eye on the bond. And then oil and gold are the kickers there. So obviously, like I said before, we're probably coming with a trade there. So watch your inbox in case the trade comes. And then as far as data, today is ISM number, which is always big for the market. Fed watches that. So we have ISM manufacturing, the prices paid number, new order, employment. So that's sort of the components in there. So keep an eye on prices paid. Fed loves to watch that. Inflation over the last couple of numbers have been tame, which is surprising. So it'll probably be a little bit lighter than what we would have expected. But if there's a surprise there, maybe that'll move the market. But overall, looking at the landscape, quiet Monday across the board. Dow down 100, S&P down 17, and the Nasdaq. The Dow down 100, S&P down 17, and Nasdaq down about 100. So quiet all around, and we'll wait to the 10 o'clock number. And I wish everybody a good trading day and enjoy.